Good evening, everyone. Once again, we see why market profile, volume profile really makes so much sense. I talked about this morning how this 1190, 1180 level should hold, and we could see a nice 20-point move to the upside, and we saw exactly that. We actually saw a 40-point move at one point, from top to bottom, thereabout. So, it was a great trading day if you're a buyer, and you can see why it made sense to buy. And if you understand market profile, volume profile, and how it works, this 10-day point of control at 1188, 1190, it held like a champ. Let me zoom in some. We can see we this morning we tested the low end of that range, and as I zoom in once more, you can see we caught a bid, bam, to the upside, bam, a retest, a slightly higher low. These moving averages are whole moving averages. They do a great job of detecting trends. You can see they're all starting to point higher, and bam, we had our little double bottom, and we were off to the races, and we went back to that 1230 level, which we saw yesterday morning with the euro when they opened up and sold off. So right now, we're at a pretty crucial point in the market, in my opinion. Think about what's gone on tonight's earnings. We had Intel, Apple, which missed, and Apple's trading off $25 below 400, and you can see that I'm not sure if that'll affect Apple, but tomorrow's going to be big. Spain just got downgraded by Moody's. We'll see how the euro and Europe trades overnight into the morning. It's going to be an interesting day tomorrow. I think it's going to be a key day. If let's say we break out to new highs, I think that's the market telling you what it's going to do. It's showing you its hand. I thought the market was going to consolidate perhaps for a day or two at the 1190, 1180 level. Oh, I was wrong, but I wasn't blinded by the fact that it could go higher. And I saw my level in the sand, and when we saw those big buyers come in this morning, bam, I went with them, and it was a good ride to the upside. And that's why volume profile makes sense. It's the way I could not trade without it, and it's just such an important aspect of my trading now. So let's break down. Let's go to a bigger chart, break down what the S&P 500 is doing. Okay, here's the 4-hour, 90-day chart that I continue to use on the S&P E-mini futures contract. And as you can see, let me zoom in once more, and I'm going to fix it up in a second. But this point of control for October and these lows, they continue to hold. We continue to see buyers, push this thing higher. It's going to be interesting to see if we can break out above this, because if we do, it really could be off to the races for the market. But nevertheless, we still have potential downside risk, with Apple down $25, Spain getting downgraded. People might sell into this strength, and it could break down the market. But, every day that goes past and the market, stays at these levels. For example, people that use moving averages, the 20 and the 50, they'll continue to creep higher. And if price comes down to those levels, where the point of control, really for this entire range, which I'll show you in a second, I can only expect that we're going to move higher. It's hard to make a bearish case right now, only because, the market's so strong, and, my indicators are lining up, which is a great thing. If price was under the point of control, then I'd probably be bearish. And for example, like I was back in this. Oops, sorry about that. Back in this range, I wasn't very positive on the market. I was I got an opportunity to sell into it just like I did here in this range. And likewise, down here, it was an ultimate buying opportunity because on the biggest time frame that I used, the 2-year daily chart, the point of control for the entire range was around this 1080 level. And sure enough, we bounced like a champ right off of it. Yeah, we went down 12 points below it, but you expect that with the bigger time frame. You expect more gyration. But now that we've seen this huge move off the top, basically I think this group of buyers that bought in this level and are now holding, with expectations for a move higher, they're going to win and they're going to be big winners. And I expect that we'll have an opportunity to see this 1260 to 1300 level in the S&P, maybe by year's end. But I'm not trying to make predictions, but I just want to point out the facts of what's going on and how obvious it can be when you use market profile and volume profile. So I want to fix up this chart so you can see where the point of control is for this 3-month consolidation that we've seen over the range of 1080 to 1220, 1230. Hold on one second. Okay, that should do the trick, and it gets what I'm trying to get at. So, I mean, you can see I made these lines this morning. I expected it to stay in that range. Well, it did, but then it broke out to the upside. So, bam, there we were. A nice 30-point move on the S&P. Made a good amount of money there. So, but anyways, so for the S&P, watch out for tomorrow because there will probably be some selling into the market only because of Apple, and they missed for the first time in 7 years, and the Spain downgrade. Even though everyone knows that Spain, Portugal, Greece, they're all not worth what their credit says, but because one, the rest of the euro and the rest of the world will help keep them propped up so the world doesn't crash, and two, well, I don't even know what I was going to say, to be honest, but let's not care about that. So let's stay focused on the market, and as long as the market stays above this 1180, 1190 level, I think it makes sense to be a buyer. Don't get too greedy, but if we do break out, be expected for a fun ride to the upside.